A health reimbursement arrangement, or HRA, is a flexible health benefit that allows employers to offer a tax-free allowance to their employees to spend on qualifying medical expenses and individual insurance premiums. A common question we get from a lot of business owners is, can I participate in my organization's HRA as the owner? The answer depends on your tax filing status and what type of organization you're running. An owner must be considered an employee of their organization in order to be eligible to participate in their HRA. However, not all business entities consider their owners employees. In this video, we'll go over 4 types of business entities to help you determine whether or not you can benefit from your organization's HRA. First, let's look at C corporation owners. A C corporation, or C-corp for short, is any corporation that under U.S. federal income tax law is taxed separately from its owner or owners, because a C-corp is a legal entity separate from its owner. That means the owner is considered an employee and can participate in their organization's HRA. Using an HRA allows C-corps to take advantage of tax benefits for their employees, their organization, themselves, and even their family members. Next, let's talk about S corporation owners. An S corporation is a special type of corporation created through an IRS tax election. S-corps aren't subject to corporate income tax. Instead, shareholders that own more than 2% of the company's shares are taxed individually. That means S-corp owners aren't considered employees, but self-employed, so they aren't eligible to receive reimbursements through an HRA. Due to attribution rules, even if family members are W-2 employees or are on the same insurance policy as the owner and their family are still ineligible. The good news is, if you're an S-corp owner, there are other ways you can write off your medical expenses. For example, you can take a personal income tax deduction for health insurance premiums paid for by the business. The third type of business entity we will look at is partnerships. A partnership is a single business where 2 or more people share ownership. A partnership is not subject to income tax. Instead, the partners are directly taxed. That means partners are considered self-employed, not employees, and aren't eligible to participate in an HRA. However, unlike S-corp owners, partners can receive tax-free reimbursements if they're married and their spouse is a regular W-2 employee of the organization, not a partner of the organization. In this case, the HRA is simply set up in the spouse's name, and the partner can receive tax-free reimbursements as a dependent. Finally, there's sole proprietorships. A sole proprietorship is an unincorporated business owned and run by one individual, with no distinction between the business and the owner. Therefore, sole proprietors aren't employees and can't participate in an HRA. But again, just like with partnerships, if an owner of a sole proprietorship has a spouse who's a W-2 employee of the business, they can be added as a dependent on their spouse's HRA and receive tax-free reimbursements through their allowance. If you're one of the owner types that can't participate in an HRA, there's still a lot of reasons to adopt one. HRAs are a key way to help your organization hire and keep its people, because your employees are free to purchase the healthcare products and services that fit their specific needs. At PeopleKeep, our award-winning customer support team helps thousands of organizations administer their own HRA every day, and we'd love to help you too. Tap below to subscribe and get more health benefit updates like this. If you're interested in an HRA for your organization, visit peoplekeep.com to learn how we can help get you started.